I think we all know the problems with San Francisco, but I think it's also important to talk through kind of the broad stock exposure. Maybe some people aren't fully aware of where the biggest concentrations are.
Yeah, I think, we all are aware of certain banks that have exposure to the CRE that's in San Francisco, and not all of it is created equal. There are other lenders in California who have done a great job of making sure that the credit underlying is strong, that they're taking very little loan risk. But I think if I think about San Francisco overall, it's been hit with multiple issues that are making it a city really in decline. Part of it was it's just priced out everyone initially during the boom. And now we're seeing a situation where if you look at any piece of data for San Francisco, be it cell phone usage, vacancies, you see that this is broadly a city in decline. And it will take years for that to reset. So I worry a lot about any lender that has exposure to any commercial real estate in that space.
Do they spell it out? I mean, are we to assume that San Francisco lenders have the most exposure, or are there some interesting cross-border exposures that we should be aware of?
Yeah, for sure. Some of the larger projects were financed by larger banks, and they're probably better able to weather them. But, a lot of the lending that's in the shadow banking sector that occurred after the global financial crisis, when larger financial institutions had to stop doing some of this lending, we have no real visibility into what that looks like. And so my concern is that those are the funds that will get hit first, but that will trickle across to the rest of the banking system. And the problem is we just don't have visibility on that the way that we do for regional banks and global banks.
Right. And I think to kind of zoom out, the problem more broadly is trying to figure out what is the worry point for regional banks right now? Is it really deposit flight? Is it a question about viability of the business model going forward? I mean, and you have to answer that before you kind of know what the appropriate policy, or if any policy response is needed here.
Yeah, I completely agree, right? Because when we think about credit overall, right, all we've been talking about is duration risk, and I understand that. But the thing is that we're just coming out of one of the best boom times we've ever had. It just didn't feel like a boom in 2021, right? Because we were in our sweats. Some of us were really worried about the pandemic. And so it didn't feel like the economy was firing on all cylinders, but it genuinely was if you look at the economic data going back, not just relative to 2020, but to 2019 as well. And as Howard Marks always says, the worst loans are made in the best of times. Mm-hmm. It is so hard for me to believe that the credit quality made during 2021 is going to be as bright and shiny as we hope it is. I really worry about the risks that people took on.
Yeah, and it's a great point that you also want to focus maybe on those banks who were especially fast growing in a year like that. Fifth Third this morning just said, they started looking at things last year on the time that gasoline prices peaked and pulling in their horns, and that if you're doing it now, it's too late. Here's a final $1,000 question to throw at you. So we go, okay, why would anyone own stocks here? I was going to ask that yesterday. Well, today we're up 400 points. The S&P is back to almost year-to-date highs. So what do you tell people?
I believe that it's impossible to time the markets, and that, your best bet is to stay invested in the markets and just focus on quality businesses that do well through a cycle. There's no way I'm going to be smart enough to know when to get in, when to get out. There's just too much risk, right? Because chances are you get in at the wrong time, you sell at the wrong time, you buy the wrong thing. It's just better to invest in quality, and it's way less stressful too.
All right. Give me one name before we go.
I really like what's happening in the software space in a company called Aspen Technology. This is a business that services oil and gas, and I think it's actually well exposed and well positioned going forward.
All right. Short answer too, Julie. We really appreciate it today. Actionable, philosophical. Have a great weekend.